Welcome to TheoTrade. This is Don Kaufman. Here we are. It's March 20th, 2017, doing the Theo Night video. First and foremost, we've still got about 14 minutes left in the trading day. Really, some of the action today, what have we seen? Well, we rallied. We sold off. We sold off harder. We rallied. We laughed. We cried. We rallied back. We look like we're going to sell off now a bit into the close. Nevertheless, it's been a fairly docile trading day. Okay, these ranges, they're not too substantial, including even the overnight range. The S&P futures, they moved about 10 points. Again, nothing too substantial. I also watched volatility today just kind of back off, but there's just been no volume behind trade today. One of the things I didn't really reference here in the S&Ps that I'm about to now is the S&Ps, listen, with only a few minutes left in the trading day, they're not even likely to do but maybe 1 million contracts. That is an extraordinarily light trading session. And again, if that doesn't, help you, just take a look at the volume out there. I mean, there's a lot of holidays that you've seen more volume. Nevertheless, I actually found a number of good trading opportunities today, and I've been kind of stalking a couple of setups lately. And I'm going to show you those. So, hey, even though the S&Ps, again, we were up, we were down, we ended up going absolutely nowhere, there are 3 setups in particular. I'm going to start off, the first one, probably the easiest one, is just the EEM, the emerging markets. Now, I've stepped in the way of this freight train in the past, and it was just right around the 37.5 range. Again, the 37.5 range. I used a spread back here, okay? The stock, it backed off, I should say, the ETF. The ETF backed off minimally and then exploded up in my face. But again, I used a defined risk spread in order to take that particular position. And yes, I am elaborating upon a trade that I was wrong in. I know it's a miracle, like nobody ever does that, right? But I was elaborating upon a trade that I was wrong in because it's important to know, hey, that, hey, I stepped in way of this freight train before and it ran me over. Well, this time I stepped up to the plate with a slightly different strategy. I didn't use an option spread, okay, in EEM. I actually went directly into EEM and I shorted shares today of EEM. And I went out and blasted out a trade. I've done this in several different accounts over here. As you can see, I've actually shorted EEM right at around $40 a share. I mean, for the most part, again, if you look at my my execution here, it's not a big position, right? I'm at $39.99 and a couple of thousandth of a penny over there. Roughly, I'm short the stock now, right smack at 40, and that's ultimately where it is, okay? I'm comfortable in shorting this stock because I kind of want to be short this emerging markets right now for more than just $1 of upside potential, okay? This has been an incredible and explosive move in a product that never really moves. I mean, it's moved from 34 up to 40, but the shortest duration move here in just the last few trading days have taken the stock from, again, the ETF, I should say, from 38 up to 40, a $2 move in what, 1, 2, 3, 4, 5, 6, roughly 7 trading days, okay? This is a product that simply doesn't move. It doesn't move $2. It's not even supposed to move $2 inside of 32 trading days. And again, I'm basing this first, setup over here in the EEM on more of statistical analysis. People, is it overbought? Is it oversold? Okay, listen. Look at the explosion to the upside. Pretty sure it's overbought. If you want to look at a like an RSI Laguerre, it's an overbought territory. I'm early. The fractal energy is lower on there. Now, you guys know I take a lot of the technical analysis with a grain of salt, but I'm displaying it to you maybe in terms that's right for you. It also had incredibly explosive volume last week. Following, of course, the FOMC announcement. Nevertheless, I have entered into a short position. How long do I intend to hold the short position? Okay, months. Anytime I start shorting an outright stock, like I have like 3-month time horizon, okay, in the back of my mind over there. So that was one of the first trades I took. Next trade I actually took was over in Tesla. I entered into a short position inside of Tesla. No, this is not going to be a bunch of bearish positions today. Don't you worry. But I entered into a short position inside of Tesla, okay? Now, if you want to look at this from a technical perspective, that's fine, okay? We're only approaching overbought territory on the RSI Laguerre. We're right there. Again, if this was going to be overbought, we'd have to come up here, flatten out here, come back down, but you may not even get that opportunity. I mean, listen, I like to draw like the chart further out because that's why you're looking at it. Maybe we just right down here from here. But there's something that really bothered me last week about Tesla. It's actually one of the overbearing reasons that I developed a short position in it. I can't get past, let me just clear the chart here. I just can't get past Tesla came out and did an additional stock offering. And the additional stock offering also came with convertible bonds. That basically means debt offering. So what is Tesla doing? They're trying to raise money. Okay, so nobody seems to question, why do they need to raise money? I don't know, because they're running out of money, easy enough. But the problem that I have with it is typically when underlyings come out and they offer more shares, doesn't that dilute the current shareholder? By the way, that's not a question. That's a comment. It does dilute the current shareholder. And in the case of Tesla, they cheered it on. Yay, dilute me. Elon Musk even came out and bought 25 million more. It bothers me to no end. And it's all I can do but not to want to short this thing with both hands. And you can see I worked a couple of different positions in here. And I did a couple of different positions throughout the course of the day. Then I don't mind showing you again. You could do the like the 65, 60. Okay, now I paid $2.50 for this spread. Okay, it's a 265, 260, 265, 260, and I paid, okay, roughly $2.50 for the spread. It's an in-out spread. You risk 250 to be able to make 250. I'll delete that one out. I also did initially, because I was pricing these, I also did this spread, which is the 262 half, 257 half for right around where it is right now, about $2.40. Anyway, I worked them separately, and this is, again, it's risk $2.40 or risk $2.50. These are easy spreads. I did it 32 days out. I'm not really trying to make a full $2.55. Okay, I'm trying to make about a 55% return, and there's a really high probability, okay, of touching out there. And when I say a high probability of touching, you know, there's like an 86% chance that I'm going to touch 257. I mean, look at the probability even getting down to 250. And you get the neighborhood of what? 64, 65%. This thing has a $21 expected move over the next 32 days. But again, I just can't get out of my head when they add additional shares, you dilute the current shareholders. They have convertible bonds out there. There's nothing good in that statement, okay? Other than, I'm Elon Musk. that was the good part of the statement. And you start to like look at markets. Markets are definitely hitting a fever pitch when they're buying into diluting the shareholder. That it bothers me, and not just for Tesla, it bothers me for the entire market. Are traders really that short-sighted right now? Do they not see the writing on the wall? We need more money. We're Tesla. We need more money, but buy our stock because I'm a good guy. It's getting out of control in there. Now, last but definitely not least, a trade that I've talked about substantially. I created a bullish position in the TLT. Now, I've been long bonds for periods of time, okay? And I'm long bonds, but I created also an in-out spread in the bonds. So I also have a multitude of different trades going on inside of TLT spread through multiple expirations. So I've actually got one on in April, you know, with 24 days on. But the one that I created today, this is an in-out spread, okay? Then I went out and purchased, and I was able to grab these for right around $1. All right. Specifically, I was able to grab this particular spread for right around like 99 cents in here. So it's a 118, 120 spread, a 118 buying the 118, 120 spread. It's a bullish spread inside of the bonds. And, you know, this is again where people start to question, well, why would you want to be bullish in bonds? I don't know. Okay. You see, they raised the interest rate last week. And ever since they raised the interest rates, okay, they raised the interest rates and the bonds are rallying. That, in effect, if you haven't looked at interest rates, since the FOMC started to talk, go over to the TNX to talk about how insignificant the FOMC happens to be, interest rates have done nothing but back off since the Fed. All right. In fact, they started backing off even before the Fed. So the Fed, yada, 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 doesn't mean anything. All right. But I want to be in the bond business. I want to be bullish on bonds. Why do I want to be bullish on bonds? Because in the end, all right, markets look a little frothy here. If markets do sell off at all, well, you think the world is not going to run back to the safety of the bond market, okay, there is a scenario where we could see bonds sell off and S&Ps sell off, okay? But the most reliable strategy historically been when they run out of the S&Ps, they'll run into the bonds. And the bonds, they've been beaten up a little bit, but they're starting to catch a bit of a bid over here. And again, as I said, I want to be in the bond business. So I am long bonds right now. I'll continue to allocate. You know, if I get the opportunity today, you can see I'm working another contract over here. Anyway, with that, there's three separate trades for you. Again, all three are, you know, well, 2 out of the 3, I should say, are defined risks. The EEM, okay, based on statistical analysis. The TLT, for the most part, this is just a long strategy looking for an explosion back to the upside in bonds. And of course, the Tesla trade over there, that's because those that are in Tesla, I mean, the valuations over there are looking a little bit nutty. Here's the S&Ps with just 2 minutes left in the trading day. And as I said, you know, we rallied, we sold off, we laughed, we cried over here. And in the end, as I said, I thought we were going to continue to sell off into the close. And that's the way that we are headed right now on what is really amounted to a very, very light volume day. Again, we're lucky to crest over 1 million contracts today. Thanks, everybody, for joining us here at TheoTrade. Have a great evening. Bye-bye.